Jin Yoon, he's the Regional Head of Internet Research for Asia ex-Japan and Nomura, and he's here in Hong Kong. Many thanks for coming in.
Great, thanks.
Baidu, 80% increase, 40% increase in share price this year. What company in the world is doing better than that?
You know, it's hard to say because of the fact that the search market in China is still pretty nascent, still very early on. We've seen the early kind of growth rates similar to this with Google in like 2004, 2005. Like because of the fact that internet penetration is still under 40%, and because there's no better alternative outside of search advertising, because offline is not as well developed in China. So a lot of people are basically going past that and going directly into search. So certainly there's no other growth company on the internet side just like Baidu.
I can feel the vibe off you, just absolutely buzzing with this, aren't you?
Sure. It's you know, we've seen 2 consecutive quarters of beat and raise. You know, coming off of a much higher base, and the company continues to reaccelerate growth. And we actually don't see any type of slowdown coming on board because of the fact that Google's no longer a picture in China, and they have 80% market share, and we will continue to grow incrementally in the near term.
I mean, Baidu obviously is the king of China. Google is the king of the Western world, if you like, putting it that way. Is there a chance of Baidu going west, or is there any chance of Google going east?
Well, Google is #1 actually in market share in every country in the world except for 4 places: Japan, China, Russia, and Korea. The fact that Google does not do well in Asian countries just because of the fact that Asian users use search in a different manner. We don't think that Google has a significant marketplace in Asia, and frankly, to tell you the truth, I don't think Baidu has any place outside of China, because China marketplace by itself should be very, very fruitful in the near term.
The other issue is, of course, that this 80% increase comes from a low base. Now, Google's already made a lot of money, so put it in perspective again. Baidu's earnings is a big catch-up to Google, isn't it? Sure. I mean, so going forward, are there any cracks?
Sure. In the near term, you know, we don't expect a significant derating in the stock because of the fact that growth momentum will continue to improve as more people come online, as internet penetration continues to improve. Will there be a point where, you know, Baidu tracks in line with Google, where it's trading at 15, 20 times going forward? Absolutely, but we think that we're actually at least a couple of years away from doing that.
What does Baidu do that Google does not do?
Well, first of all, Baidu has operations in China. As you know, a couple of years ago, Google lost their license to operate search in China, and certainly all that market share was just basically shifted over to Baidu. And we don't think that because of the fact that they don't have a significant competitor, Baidu will continue to accelerate that growth momentum.
But is there any sort of element of its marketing strategy, of its development, of its functionality that actually is better than Google?
You know, it's actually a function of habitual use. Search is a very habitual use type of technology. Like Google. Baidu really gained market share in the early 2000s because of the fact that they could actually offer more services than when Google came in. 1, they had the first competitive advantage, and 2, if you look at Baidu in 2002, majority of their search revenues, search came from MP3. And now, because Google were not allowed to offer those MP3 searches, Baidu users, when they were 12 years old, are now 25 years old, still continue to use Baidu because of its habitual use.
Okay, your finger's on the pulse. You're the regional head of internet research. Give me another company that you think is exciting right now.
You know, what's exciting right now is online video. We think that Youku and then the rest of the online video space will continue.
That's the YouTube.
That's the YouTube version of China, but Youku is a little bit different. Online video is a little bit different because it's very little user-generated content, but it's all licensed content. It's a Chinese version of cable TV and on-demand TV. And we think online video space is very exciting with 150 to 200% year-over-year growth. We think that Youku and the likes of Baidu subsidiary of Qi.com will continue to gain momentum in the next few years.
Jin Yoon, I can feel your energy, I can feel your excitement about this. Thanks for coming on the show. Baidu there, and of course also Youku.